Welcome to another episode of the Global Investors Podcast. I'm your host, Charles Carillo. Today we have Cory Jacobson. Cory and his partner Ryan have built a real estate portfolio comprising of over 80 units across multiple markets, including long-term and short-term rentals, multifamily apartments, and a large multi-purpose resort. Their passion for entrepreneurship led them to create the Wealth Juice podcast, which is a top 1% podcast globally with tens of thousands of monthly downloads. Additionally, they built a community of individuals who are striving to grow their real estate portfolios and achieve financial freedom. Cory, thank you so much for being on the show today.
Charles, thanks for having me on, man. This is awesome. Thanks for the warm intro, and it's good to see you again. I know we had you on our podcast, maybe 6 months back or so. So thanks for the time.
Yeah, thank you so much for coming on. And you guys did a few things before getting involved with real estate. Can you give our audience like a little background on yourself, both personally and professionally, prior to jumping in and starting your current real estate company?
Yeah, so I'm 33. I'm going to be actually, by the time this podcast episode comes out, I'll be 34. So that's a little scary. But I started investing in real estate when I was 26. And prior to that, what I was doing actually is I'm in Philadelphia, Pennsylvania. I went to Temple University. I actually worked for the 76ers. I don't even like to say that out loud these days because of how sorry they are, but I was making a whopping $35,000 working for the 76ers, running their youth programs. So like running their camps. It was the most fun I'd ever had at a job. It was awesome. I got to meet the players, the whole nine. My boss could not pay me any more than that 35. He said, you know what? I think what we can do is we can get you up to 40, maybe 45. And I was like, well, I'm 26, so I don't need a ton of money, but that wasn't exactly thrilling to hear. So he said, you know what you should do though, Cory? What you should do is you should buy a 5-bedroom house and you should rent 4 of the bedrooms to the sales associates or other people that work here because they're always looking for roommates. They're also not making a ton of money at the beginning stages. And so it was interesting because he actually had a rental portfolio on the side of his job. So I didn't exactly take his advice, but I bought a 3-bed, 2-bath, lived in one of the bedrooms, rented out the other 2 bedrooms, had roommates that I was renting with. They were my friends. They came with me. They're like, I'd rather pay you than pay our existing landlord. And for the first time ever, I was able to live for free. So I went from living paycheck to paycheck to being able to save over $1,000 a month. And that is what springboarded my real estate investing journey to the point where I could have a little bit of like less desperation about what job I took. And all of a sudden I was able to buy a duplex, and that's sprungboard. And I can talk about the portfolio, but I since had left the Sixers. I went to work in sales. I worked actually at my family's business, which I have since left to pursue real estate investing, be an agent full time. But yeah, I mean, that was my entryway into real estate, and it was the single best decision I ever made, which was house hacking. And I can get into that more, but that it changed everything. And it was the catalyst that got the ball rolling down the hill.
Yeah, that's awesome. It's a funny side story. My brother went to Temple for a couple of years before going back to UConn. We're originally from Connecticut. So, but anyway, yeah, I've been to that. That's a tougher area of Philadelphia when I remember it about 20 years ago when I was down there. But
it is still a tough area of Philadelphia. I love Philadelphia, and it gets a bad rap nationally, but it is amazing. It's a great place to live. There are pockets of Philadelphia, like Chicago, like New York, like anywhere that you wouldn't want to live. And where I lived at Temple was one of those places that I wouldn't want to live, but I did it.
So let's talk about like your house hacking journey. I got started in house hacking as well a little bit a few years before you did, but it was something that I don't know if I was really cash flowing on it. I just remember when I had everything was like rented out. It was like the 3-family house I was I done. It was it was costing me like $40 a month. So obviously saving several $100s a month on rent, at least if I went like was a roommate in someone's apartment. So the thing though is that, tell us about how before we get into what you're doing now, a little bit of background about how you structured that and maybe some mistakes you made or kind of a little background on the whole process.
So this is very simple. And this is why I tell people the best time to invest in real estate was yesterday. The second best time is today. And you can't go wrong if your idea is to hold on to properties. I really think that this cash flow game, it's all about defense. You play defense enough for the appreciation principle pay down to make you a bunch of equity and make you a lot of money. That's how this game works. In the house hacking world, what I did is I bought a $250,000 3-bed, 2-bath in 2018. So that property today is worth about $405. So all I've done is just held on to it. But I was paying about $1,000 a month in rent with these 2 roommates. And I said, guys, why don't you just come with me I had the master bedroom. They had the two of them were in two separate bedrooms. They shared a bathroom. They were already doing that. So they're like, fine. My mortgage was like $1,500 a month. They both paid $750. So I was pretty much break even before utilities. And the structure was, hey, I'm asking these guys to help me do a favor to start building having my wealth building journey get started. So I'm not going to raise the rent over a couple years at all. And I didn't. And, after that, I had my, ex-girlfriend had moved in with me. So I did it for 3 or 4 years, which allowed me to springboard to buy this second property, which was a duplex in New Jersey that cash flowed $300 a month. And it was a $125,000 purchase, which was, nothing to write home about. I made all the mistakes possible. It was raining inside my property day one. I was getting texts from my tenants on a flip phone. I didn't even know you had to fix windows when they were broken. All of these things went wrong. But over time, I fixed up some bathrooms, I fixed up some kitchens, and that property, the duplex is what really taught me the power of real estate, because I sold it 3 years later for $100,000 profit. And I thought to myself, Charles, I was like, the chances of me saving an average of $33,000 a year from my job was very, very slim. I couldn't do it. So then I took that equity and put it into another property. And then you start the real life monopoly game. But what the house hack taught me is that even if you're not able to cash flow in your first property in your house hack, you can have a personal cash flow difference. So for example, today, how does this relate to people in 2025? That's what people want to know. Well, if you're paying $3,000 a month in rent, which by the way, in some cities is cheap, in others that maybe that's on average. Instead of trying to look for the perfect house hack that you could live for free, what if you were able to cut your living expenses in half? What if you were able to spend $1,500 a month towards your mortgage and have the tenants pay down the rest? And then you have a personal cash flow difference of $1,500 a month, which allows you to save up more money, and you're getting the tax benefits, and you're getting the principal pay down, and your property is appreciating at 3 to 5% based on the purchase price, not the down payment that you put in. So that, to me, is why real estate changed. It just started to shift everything, where I put $20,000 into my house hack down, right? But I'm not getting 3 to 5% on my $20,000. I'm getting my 3 to 5% on the $250,000. So to me, I don't know if I directly answered your question, but that was how things started to shift in my head, like the rich dad, poor dad moment, where I was like, oh, wow, these assets can go to work for me while I still work my job.
The other thing too is that not that we're really worried about this if you're making $40,000 a year, but your taxes on selling that after 1 year are going to be a lot less percentage-wise on that $100,000 than they were going to be on. And it was a personal residence, so you didn't have to pay anything. But if it was an investment property, you'd be paying a lot less via capital gains versus earned income. So yeah, it's a very powerful thing. But I always found like the pay down is a big thing. I remember it was like $350 or $400 when I was doing my numbers. So you're pretty much like, okay, well, like that's kind of like the fee I'm paying myself and putting it kind of into savings, you know what I mean, kind of a thing, as I'm like managing this. So there's a lot of different things you went through there, a lot of benefits. And like you said, you went through a duplex. I think it was my second property I bought, and it was just like, I'm like, oh, this is how it's supposed to work, and this is how it's supposed to cash flow. The first one was just like, it was fine, but it was kind of a little bit of a mess. The second one, I was like, all right, now I started making money a lot sooner in it and all this kind of stuff. And I was like, okay, this is what everybody talks about. I find, I figured it out a little bit. So
yeah, without a doubt. I also think, Charles, the mistake that people make is they're looking for real estate to be the escape route from the job or the thing that they don't like that they're doing. And I do not think that's the best way to approach real estate investing. Now, if you want to start a flipping company, or you want to be an agent, or you want to be a wholesaler, that could be your potential active income escape. The real estate investing is going to pay you dividends on dividends on dividends, but it is not going to work the way that you want it to work until 5 to 7 years. And I know that's not what people want to hear in an age where you can press a button, right, and get something delivered to your house in 3 hours. But I'm telling you, from somebody who's been in the game for just about that 7 years, this last 2 to 3 is when things have exponentially gotten significantly better for me. I was in the mix for the first 5 years thinking, this is not spitting off as much cash flow as I really thought. This isn't exactly allowing me to escape. I still have to work. until I flipped the script in my head. Like, I'm not trying to escape the job. I'm trying to escape the desperation of doing a job that I don't want to do. What I am doing is trying to wake up every day and do something that I love and have the real estate work for me, so that instead of, if I did want to put it down and retire, which most people that pursue financial independence, you're not really going to retire. But if I did want to do that, maybe it's not 65, maybe it's 40. Maybe it's not 65, maybe it's 45, but I can just do what I want every day. That's the way that I would approach real estate. And you mentioned there's so many different benefits. This year, the tax benefits have been like the biggest benefit that I didn't even realize until year 7 in the game, you know?
Yeah. Yeah, no, I spoke to an investor many years back. I remember him telling me this decades back, and he would tell me like, he'd call it like I call it like the 10-year, kind of 10-year law of real estate investing. You know what I mean? If you're in there for 10 years, if you start screwing with that and you start trying to, really trying to push numbers and push things and get cute with your financing, all these type of things, you're going to run the risk. If you can hold a property for 10 years, it's very, very difficult to lose money in real estate. You know what I mean?
That's exactly it, dude. That's exactly it.
And when I see people that are very successful in, especially we're talking about like apartments here and stuff like this, but kind of any type of commercial real estate, let's say, including multifamily apartments, it is something that they have money and they put it in there because people use like, it's a store of wealth. That's really what the thing is. It's difficult to not have any money, start in real estate. Like you said, it's very slim cash flow in the beginning, especially because you're going to have a lot of people that don't need that cash flow, that want to buy good properties, that don't mind overpaying for good properties if they're keeping it for 10, 15 years. So that becomes more difficult. That's why you'll see a lot of people that are like agents and investors, or brokers and investors, or property managers and investors, whatever it might be. So they have some active income coming in, and then they store money they've made in it. And then that's where they come back and they look at it 5-7 years down the road, like you did. And you're like, wow, like I think really went up in value. Like all this work I did, you're getting paid. That's what equity is turning into actual equity in your deal when you refinance it or when you sell it.
Yeah, that's exactly it. And by the way, I am an agent. I still have several avenues of active income. We're starting to get paid significantly on our multifamily projects, but for years, we're paying back our limited partners. Like we're paying back our investors. And as general partners, we're not taking a lot of profits. So, and that's fine. That's what I want. I want my investors to be taken care of, but I'm an agent. I run a mentorship. I teach people how to get started in real estate investing. That's what I love to do. I'm a coach at heart. So the active income is still a very big part of my life 7 years into this game. So by the way, if you wanted to maybe escape your job and just live off the investments after 7 years, I'm not saying that's impossible, but it's harder than most people think. So continue to work in the field that you want to work in. And to me, it's just all real estate adjacent. It makes so much sense. And I like being an agent. I really like helping people get into investment properties or getting into their dream home or their starter home. Like I've seen how much that affected me in a positive way mentally and financially. So I like doing this.
Okay, so like Cory, let's kind of move forward here a little bit to what you're up to now. Tell us a little bit about how you started really scaling your portfolio, whether it's your own investments, and then kind of how you build that. Because after you get the first deal, and usually there's favorable financing, whether you're veteran with VA or FHA, 3.5% down. After that, it gets a little bit more difficult because now you have to put up some serious, sizable down payment. So kind of how did you get through that on your your second, third properties down the road?
Partnerships were everything for me, Charles. And this is the key that I'm going to share with people. So inevitably you run out of your own money in real estate investing. It just typically happens. I actually put 10% conventional down on my first property, right? And then I went 25%, like on these small multifamily in New Jersey. And it was me and my partner, Ryan, saving up, deploying our cash. And that was how it worked until the first about 8 units. But one thing that we did that I would recommend to anyone is I use the term build in public. So start documenting your journey and talking about the story, because we started our podcast and our social media platform, that's Wealth Juice Official on Instagram, when I had 2 units. So I was nobody to talk about real estate investing. I just wanted to share my story, and hopefully people would follow along in the journey of fixing this house or this problem that came up, as opposed to thinking about it from a lens of, oh, I built 1,000 units in 1996, which is what a lot of people on the internet or, these multimillionaires are talking about, and it's hard to relate to. So we started our podcast, social media platform, and our real estate investment company, essentially, when I had 2 units. We got to that 8-unit mark, just deploying our own cash. And then the partnership started to form because we were able to organically network with people that we met through our podcast and through our social platforms to buy larger projects. That's when Ryan and I we discovered this power of investor relations and marketing and underwriting and being able to raise capital from individuals who knew, like, and trust us. And we said, hey, these are the deals that we did. Check this out. I would risk my own money first. And now I'm in a position, hey, if you want to come invest with us and get double-digit returns backed by real estate, let's do this thing. So we bought a 7-unit with a partner. We bought a 43-unit. That's the boutique hotel that you mentioned in the intro. An 18-unit, and then a 10-unit. And we're looking, hopefully this week we'll have another 8-unit under contract. So we've played in this field of like 5 to 50 units because it's not institutional, doesn't really touch it. And it's a little bit above mom and pop. And we found that is where our partnerships meet the skill sets so we can combine. And then, Ryan and I have put up our own money for some of these deals. We've raised investor capital. That's the way that we figured we were able to scale, because I thought to myself, am I going to be able to compete with the people that are doing this full time? And should I just continue to buy duplexes and triplexes? You should start that way if you want to get involved in real estate investing 100%. But then to me, I was like, I'd rather have 20 or 30% as a general partner of an 18 or a 40 unit than have 100% of another duplex, because I didn't know how to go buy these myself. So that was how things started to scale for us. And I can attribute it all to personal branding.
Really? Okay. Do you have money sitting in the stock market and you're worried about it? Or worse, you have money sitting at the bank, not keeping up with inflation? My name is Charles Carillo, founder and managing partner of Harborside Partners. And since 2006, I've been investing my money and my family's money into income-producing properties. These are real assets, real properties with real addresses that produce real cash flow. At Harborside Partners, we provide passive investors who love real estate with a turnkey investing solution. If you want to put your money to work in real estate but can't find deals, don't have the time to get funding, and the last thing that productive people want to do is manage real estate. We find the deals, we fund the deals, and we manage the tenants, the termites, and the properties. Partner with us at investwithharborside.com. That's investwithharborside.com. Go to investwithharborside.com. If you love real estate, you like the idea of passive income, and believe that income-producing properties will appreciate over time, go to investwithharborside.com. That's investwithharborside.com. One of the things before we get into kind of raising money from investors, you mentioned you're buying duplexes and triplexes, and I started the same way. And it was one of the things is that, how did you handle your property management on those deals?
Yeah, it's a good question. So at the beginning, until that 6 to 7 units, we managed ourselves. We used a product called Rent Ready. And if anyone's heard of Rent Ready, they're like a property management software. It's like $10 a month, and you could collect maintenance or do maintenance requests right through an app, collect rent payments. And it made it pretty easy for us to manage. But once we got to that around 8 units, I kind of was like, what is my dollar per hour task? And should I just offload this? After that 18-month or 36-month seasoning period where these properties start to make a little bit more money, I can take a little bit less profit, hand it to a property manager, and let them handle the maintenance, let them handle the tenants, let them handle the issues that come up inevitably in real estate investing, so that we could focus on what we were good at, which was branding, going and buying more deals, starting and continuing our podcast, and just meeting and networking, as opposed to like having a contractor and trying to negotiate with them over $500. That was how things started to change. So for us, it was about that 6-unit mark that I was like, okay, I think this is better to hire a PM and have them handle those things. So yeah, hopefully that, painted the picture a little bit for you.
Yeah, no, it's a very difficult, because I didn't have this. I luckily bought properties that were near each other. So when I self-managed them up to like a dozen units before bringing in property management, something like this, it was a little easier, but it was very time consuming. And I offloaded a lot of stuff off my plate to different handymen and contractors. But it's something where I think you have someone that maybe they're house hacking a duplex or triplex, whatever it might be. And then, a mile away, they find another duplex. Then a mile past that, they found, and now you're like, oh, wow, I just have these are great deals, but I have 4 properties that are it's 20 minutes to drive to here and stuff. And it's becomes more difficult and difficult. And if it's difficult for you, you're not going to have property managers, in my experience, lining up to take those off your plate. You know what I mean? It's going to be a much more difficult sell versus you're like, hey, everything's right here. And within this 5 blocks, and you can keep properties, everything here in this storage place and over here, over there. But I mean, what have you heard with people in your community that maybe have been able to work through that like you guys did?
Well, building a team is probably, outside of like understanding how to analyze deals, is probably the single most important thing that you can do in real estate. Because if you make yourself the entire team, then you just bought yourself another job. So one of the things that happened to us, Charles, is that I'm in Philadelphia, but I started buying properties in South Jersey. It just felt, the taxes are a little bit higher, but there were more duplex, there were more small multifamily options at the time in South Jersey. And what ended up happening is that these properties were like 30, 45 minutes away. And once I started to put the system in place where I didn't have to go to these properties, I then started to think, 30 to 45 minutes away, what would it be like 2 hours away? What would it be like a plane ride away? Could I create the system, if I'm not going to these ones, that I didn't have to go to the properties at all? And our community, actually, it's very interesting. Our community, as we have a number of investors in Philly and New Jersey, and some of them invest in a place like Augusta, Georgia, or they invest in Detroit, Michigan, and they've been to these places once or twice, and they've built a solid team on the ground, the right agent, the right contractors, the right property managers, the right handyman. You build this team, and actually it alleviates you from even being tempted to go to these properties and do the fixes yourself, which if you are a business owner, you want to get away from. So I mentioned I sold that first duplex that I bought for $100,000 profit. My fiance went to University of Tampa, and I visited down there with her a couple times, not when she was in college, but just like in the last couple of years. And I just fell in love with Tampa. So I took that equity and I bought a property in Tampa, Florida that I get to go down and visit, but I use it as a short-term rental. I'm not managing that property. I'm not taking on the responsibility, especially a short-term rental, to go manage that property. So that taught me, okay, if I can be in Philadelphia and own a property in Tampa and have it run, aside from a hurricane coming, which is out of our control, and have it run with our management company, could I buy properties in other areas? So our portfolio now is, actually, we're selling off some of our last properties in New Jersey and PA just because we've owned them for several years. Our 18 units in New Hampshire, our 10 units in Vermont, and we have some properties in the Pocono Mountains. I'm not advocating for people to buy in 20 different markets, not at all. But I'm saying if you can establish yourself in a solid market that fits your buy box, the world's flat. You can buy in any market. I say the world, more the country. I don't know anything about buying internationally, but you can live in Philly, you can live in New York, and you can buy in Ohio, and you can buy in Missouri. Absolutely. But it's about putting the team together.
So let's talk about that the biggest part of that team is you're going to be your property manager and your property management company. So what advice would you have for, our listeners on vetting a potential property manager? Because this is something I've struggled with in the past. And I work through referrals mainly from other investors. Getting referrals from brokers haven't been really the best, but other investors in the area that owned similar sized properties and class properties to mine, I've been very successful in getting good good names off that and vetting them and bringing them on board. So how about for you guys, how you've done that?
This is why it's so important to surround yourself with people who are doing what you're doing or doing what you want to do or a couple steps ahead. If you can put yourself in the rooms with people that are like, hey, I'm trying to get my first or second property, but I'm hanging out with people who have 4, 5, 6. Cool if you're hanging out with people that have 1,000, but they might not be able to relate to you. So if you can put yourself in those rooms, because you're absolutely right, Charles, having the investors give you the referrals has been the biggest thing for us from the property management side. The property manager, it can make or break your deal, period. If you have a bad one, it can break your deal. If you have a good one, it can allow you to scale a lot quicker. What I like to do is as I'm looking on Zillow or I'm chatting with an agent or I'm looking at properties, I call property managers in the area and just say, hey, and pick their brain if they would take this on, and you'll start to learn neighborhoods by saying, I wouldn't manage that property. Okay, this is probably not a great neighborhood or an area that they want to go collect rent or an area that they want to manage. So that's been one of our ways to even before I'm ready to buy, just pick the property manager's brain. The other thing is that once a relationship is established with the property manager, that 10-unit deal that I mentioned came to us from our property manager because we're constantly talking to them like, hey, if any of the other owners that you have want to offload, we're looking to buy. We're in growth mode. And he brought that deal right to us and our partner. So it's an art, not a science in terms of the vetting process with the property management teams. I would say chat with a number of them, but they can be your biggest ally if you do it right. But like you said, the investors, getting around other investors who are buying in the market that you want to buy in, or just buying in general. That is how the referrals come. And that's how good property managers find their wins to help grow their business. And it can be a really collaborative win-win scenario.
Yeah. No, for sure, for sure. So kind of going a little forward into what you guys are doing now, you're raising money from investors. Can you give us a little bit of a breakdown of your company's current investment strategy?
Yeah. So I mentioned this a little bit. What we're doing is we're buying this like 5 to 50 unit multifamily. And typically our number one focus is on the Northeast, and this is Vermont, New Hampshire. And I've found that it's basically because we have our best team up there. Like our partner, Sean, he lives in Vermont, and he is so good. He's lived there his whole life. He's so good at finding the right deals. Everyone's chasing deals in the Sun Belt or chasing, deals in Florida and Georgia and the Carolinas. But I think an overlooked market is actually in the Northeast, and people would probably stay away from that. But our strategy, what it has been, is typically value add multifamily. However, this most recent deal that we've done, we actually bought a 10 unit that an investor had flipped and it needed to liquidate cash. So this is interesting. It's not exactly in our typical buy box, but he needed to liquidate to get out. He flipped this property. So we're buying it turnkey in 2025, which is not exactly the strategy that I would recommend for people, but we are 15 minutes from Dartmouth Health, Oracle, Strava. There's like this interesting tech hub in the Northeast that people probably don't necessarily know. But let me go back to Dartmouth Health. We're 15 minutes from Dartmouth Health. So we're renting out our 10 unit, their 2 beds and 1 beds, to traveling nurses that are getting direct stipends from the healthcare institutions. So we're able to get a premium on these rents, where a 2 bed would typically rent for $2,200, but we're able to rent it for $3,000 because the traveling nurses are on 6 months or 4 month time frames at the healthcare institutions, and we get stipends directly from them. The key here is that the vacancy rate in this area that we're buying in is like 0.4%. So there is just a supply imbalance with the amount of demand that there is looking for properties in an A-class area that we bought this property in. So it's funny that you ask about our strategy. I have a geographical strategy and a number of doors in terms of like a 5 to 50 unit. But our strategy within, in terms of whether we're going to go Section 8 or whether we're going to go traveling nurses, that has shifted because the 18 unit in Manchester is completely Section 8. So I think real estate is about having like your buy box to a point where you can have a geographical area, number of units that you buy, but then be flexible with the strategy that you use once you acquire these units, because what's going to bring you the best yield and bring your investors the best returns. So it's changed a little bit, but that, the Northeast, Vermont, New Hampshire, 5 to 50 units is like what we focus on.
Nice. So Manchester, Vermont, you're saying?
No, Manchester, New Hampshire.
Manchester, New Hampshire. Okay.
Yeah. And then, which is right, like in Southern New Hampshire University is right there. And then Vermont, Quechee, Vermont is where our 10 unit is.
No, I say because being from a New Englander, every state, we use the same town names in every state.
Yeah, they have the overlaps. I know. I've noticed this too. It's interesting.
Yeah. So, and everything's so close. So that's why I was asking. So
there's got to be a Manchester, Massachusetts as well. I'm sure
there's definitely one in Connecticut. I know that for sure.
Yeah.
So it's, there's all over. There's a Salem, Connecticut, Salem, Massachusetts. And there's probably more. But it's just one of those things. So you have to really, everything being so close, you have to really, when I talk to people, it's something you have to say the state too. So, but anyway, that's awesome. Yeah, Vermont and New Hampshire, beautiful places, and definitely a lot of growth, especially since COVID. So it's awesome. It's awesome that you guys have that. I know of one other investor that has a similar strategy or similar kind of marketplace of where you are. Actually, a couple of them. There's not too many, like you said. Most of them are down in the Sun Belt and stuff like that, focusing on properties down there. So with what you're doing, I mean, you're sourcing from deals from your partner up there, sourcing deals from agents. Is that how it is? Usually on market?
Actually, most of them are off market. They're coming from lending relationships and they're coming from our property management relationships. So that's typically how we're sourcing these deals, where Ryan and I come in and we do the underwriting, back the underwriting. We do the marketing. We help do investor relations. And we bring our expertise of like like I said, really the marketing aspect of this and getting eyes on our property. And then we manage the property manager, and he manages the construction. So he's doing the rehabs and all that stuff, and we're managing the property management team together. So that has proven to be like the mesh of skill sets that I would recommend anybody start to think about. What are you really good at? What can you bring to the table? Maybe you're the boots on the ground. Maybe you have the time, but not the money. And our partner has a lot of money too, but he's been in the game for 10 years. But it's more so how does your skill set parlay with another person's skill set? And by the way, partnerships are not for everyone. They don't always work. Some partnerships have gone sour, but I think it's the best way to scale if you can match the core values of your core values of what you bring to the table with somebody else. That's what we found has been the best way to go upwards.
Yeah, it's great. The property manager is a great source. I've a number of times been offered properties from managers that you work with, and who's going to be first to know? Yes, you can send out like 10,000 letters and then find someone that's ready to sell. Or you hire a property manager and you're going to be there. They know that you want to sell this thing before the owner's spouse knows they want to sell it. You know what I mean? And they're going to reach out and try to, because they want to keep the business, they're going to reach out, and it's a perfect, if you have them manage your property as well, it's just like keeping the owner on as, during the ownership process, because with you as a partner, because they know so much about the property, they know all the different issues, and they're most likely not going to bring something or try to sell a property back to another client of theirs if there's a lot of issues with it, because they're going to have to be the one that manages it versus if they've had it for 10 years. Yeah. Mm-hmm.
Well, think about the incentive, Charles. Yeah. The incentive for the property management team or company to keep it within their sphere. They are like, well, if I'm going to lose this 15 units, and that's going to be, at 200 or 300 a door, that's significant for them in their business plan. Maybe I can keep it in-house, not only keep it in-house, but sell it to another investor who's going to improve the property. And then I'm, as a property manager, going to then make more money on it. So I think their incentive to move them in their own sphere is huge. And that's why some of the best deals come from property managers, which I don't think a lot of people utilize, to build a relationship with your property manager. Property management is like the thankless job of real estate. You know what I mean? Like they're always in a bad mood, and rightfully so, because they're getting yelled at by tenants or not getting paid. And then every time they call an owner, the owner's like, shit, what's this? What is the property management? What do they call me about? Can't be good. You know what I mean? They can't be depositing more money in my account. It's got to be a bad thing. So, but developing a true relationship with them is the key, where you highly and you over communicate. And then before you know it, you have deals falling into your lap from them.
Yeah. And you can bring them on. We're talking about sourcing deals from them. They're probably not going to give you deals before you buy a property and have them manage it. However, you can bring them on much earlier in your relationship too, to have them vet deals and pay them for this, obviously, but to vet deals that maybe you have LOIs accepted on or something like this, or you're thinking about putting numbers in, or have them review your budgets and offer to pay everybody. But it's just one of those things where you have someone that knows better than your agent, better than broker, anybody, kind of what the pricing is for this on the street. You know what I mean? And it's the best thing, because I would have, if I need a roof or something, you have a property manager and we can ask them, these are the quotes we got. And they'll pick out, they'll say, this is a fair price. This is too high. I don't know how this person can do it this low, you know what I mean? Type of thing. And then it's you're utilizing that information and they're helping you tweak it. And property managers, they should be saving you money. I remember they'd be like, oh, you got to structure it differently and make sure you keep like this X percentage as a holdback after the roof's done or after this project's done, things that I wouldn't have thought of. And that you can negotiate into the contract, and you're like, wow, that he was right. That person didn't come back and clean up the shingles. So it's just like,
Yeah, sorry to cut you off there, Charles. Most of the time, property managers are investors themselves, and they got into property management because they had a hard time with their property manager, right? So they're seasoned most of the time. I think it's very rare. I haven't met many property managers that don't own real estate themselves. Some of them don't just focus on that, but they own the real estate and they're like, you know what, we've gotten big enough. We got to bring this in house, and then we can start to manage other people's property. So they're like highly seasoned and great people to network with.
Yeah. So as we're kind of wrapping up here, I mean, what would you say with your community, with your own business, with your partners, what are common mistakes you see real estate investors make? And this doesn't have to be just multifamily or short-term rentals, but maybe anything in the sphere of real estate investing in general.
I think that people think that they have to be a lone wolf, and that they have to do all this alone. And it's like, I have to hoard the cash. I can't talk about what I'm doing. The scarcity mindset. I think that's the biggest mistake people make, truly, because I think that you can go far alone, but you can go a lot further together. So not having somebody, a mentor, a community of people that are doing what you want to do. If I would have had that sooner, I would be a lot further along. And you're seeing it over and over, time and time again, of people in our community where they join our community when they don't have any properties, or they have 1 unit. And 10 months later, they have 7 units. And it's because they're talking every day or every week with individuals who are a few steps ahead of them that are literally giving them the blueprint and the roadmap. And I think people have a false sense of what money is and its abundance. There's enough money to go around. And if you are a giver and you put your message out there and you want to help others, it's going to come back to you. So the mistake really is just not getting around the right people early enough and thinking that you got to go do it alone. I mean, that's what we do now. Is we run a community of investors teaching people how to buy their first or next rental property in the next 3 to 6 months, because it's helped us in our journey, having that person that was a couple steps ahead of us that I could call when it was raining inside my house, or I could call when I had an issue with financing, or every single step of the way. And just knowing what to do and what not to do can turn $30,000 or $40,000 mistakes that would turn people away from real estate into not a mistake at all, or maybe a $2,000 mistake. And that, I think, is where people miss the mark on anything, business, life, just surrounding yourself. It's not about the journey or the destination. It's about the company. Like, who are you doing this with? That's what has been most important to me.
Interesting. Well, Cory, thank you so much for coming on today. How can our listeners learn more about you and your business?
So the best way to follow along in our journey is to follow us on Instagram at Wealth Juice Official. That's me and my partner, Ryan. We post every single day. We have for just about 6 years on social media, motivational quotes, stuff about our specific real estate portfolio, our journey, throwing some humor every now and then in there. And then if you want to listen to us more longer form, hear about our journey, listen to people that we've had on our show, like David Green or Brandon Turner or Tarek El Moussa, the Wealth Juice podcast. We're coming up on 6 years doing that as well. That's so much fun. We have great guests on there. So those are the 2 places that are the best way to get in touch with us. If you want to hear more.
Okay. Well, thank you so much for coming on. We will put those links into the show notes, and looking forward to connecting with you here in the near future.
Thanks, Charles. I really appreciate your time, man. Thanks for having me on.
Talk to you soon. Hi guys, it's Charles from the Global Investors Podcast. I hope you enjoyed the show. If you're interested in getting involved with real estate, but you don't know where to begin, set up a free 30-minute strategy call with me at schedulecharles.com. That's schedulecharles.com. Thank you.
Nothing in this episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this podcast are limited to accredited investors. Any investments will only be made with proper disclosure, subscription documentation, and are subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Syndication Superstars, LLC exclusively.